economy is starting to roll over, despite what some people say. Well, I think the numbers are dishonest. They're not just inaccurate. I don't think they're. I think we've long since passed the point where they're trying to get it right.
So you're saying that the metrics or the lens through which we look at our economy is completely wrong, completely murky, completely skewed.
The Fed, their entire purpose for being is to throw us out of equilibrium. The further from equilibrium you get, the more violent the return and the more destruction that occurs because of that return. We are going to give it all back in a catastrophic correction. The dollar at some point is going to collapse. So when the selling starts, everything's going to sell. People are going to start selling the shirts off their backs at some point, probably. And so you don't really want to own anything when the selling starts. Here's the problem. We're at a market top. We have never been at a top with people in such a grumpy mood. This top, you got people who are talking about civil war. You got people who are talking about authoritarianism. It could get pretty gruesome, I think.
On the Spot with Michelle Makori is brought to you by Goldback Inflation-resistant 24-karat gold currency.
Hello, I'm Michelle Makori. Thank you again for joining us, and make sure to subscribe if you haven't already. My next guest is an outspoken and thought-provoking voice in finance and economics. A professor of organic chemistry at Cornell University by day, Dave Collum has also gained a significant following as an investor and financial analyst. He cuts through the noise in his annual Year in Review, where he critiques everything from monetary policy to societal trends to geopolitical events. He's a contributor to Zero Hedge and a contrarian voice on numerous other platforms and publications. And he says that right now, US equity markets are overvalued by at least 150%, and that in 40 years' time, the markets would have gone nowhere when adjusted for inflation. Here to give us his thoughts on the economy, gold, the fate of the dollar, the US elections, and how we're in an era where even a fact is no longer a fact, is Dave Collum. Dave, welcome to Kitco and to On the Spot. Very good to have you with us.
Oh, I'm glad to be here. I'm a big fan of Kitco. Right? You've got many good analysts there.
All right. Well, we're thrilled to have you with us. And I'm curious to get your thoughts on a number of topics, including the latest inflation data and how that fits into your overview of the economy currently. But before we do that, why don't we start off with an overview? What is your point of highest conviction right now?
Well, the point of highest conviction you already hit, and that is that the markets are way overvalued. Someone once said, who's the Dow theory guy? Richard Russell once said, why can't they just keep going up? And he had a great metaphor. He said, go into your kid's room, start stacking blocks, and just keep stacking them. What happens? And eventually the stack gets so high, it becomes very shock sensitive. And then so some subtle vibration causes the whole thing to fall. You end up with a big pile of rubble. So the further, what any chemist or physical scientist will tell you is that the further from equilibrium you get, the more violent the return and the more destruction that occurs because of that return. So that's what a bomb is, a bad earthquake, a hurricane. There's a good one for you. So it unleashes this huge amount of energy that's pent up in the system. And so overvaluation is appreciation that has been pulled forward by the more overvalued, the larger number of years. And that appreciation is going to be eventually given back, or you're going to have to wait for it to catch up. And 150% is too much. So right, that's the first. Second is I think the economy is starting to roll over, despite what some people say. I think all the indicators say that we are rolling over.
What do you mean by rolling over?
If you look at official statistics, you don't get a good read because it's election year, and I think the official statisticians lie their tail ends off. So I don't trust those. But if you look at, for example, commercial real estate, it's in a disaster state right now. If you look at numbers that are below the radar, so instead of looking at national job numbers, which turn out to be dominated by new government jobs, and those are worthless jobs. That's busy work. If you talk to anyone about what's really going on at street level, you find out that businesses are having trouble. They're struggling. And so I think, and I'm not alone in this. Someone like Stephanie Pomboy, and there are some bears out there who say this exactly the same thing. So I think in 1991, there was actually a poll done of 51 economists, and they said, are we going to have a recession this year? And the economists all said no, and it turns out that the poll was done. At the point the poll was done, it was later found out that we were 6 months into the recession. So one could argue that if we wanted to save money, we should stop paying economists.
Well, again, it always depends on how you define a recession. And by which data and by which metrics, the technical definition, 2 quarters of negative GDP growth. But
yeah, I don't like that one at all, but yeah.
And we've had many guests on the show that have made the same point, especially when that GDP growth is inflated and is not really connected to what is happening on Main Street and in the everyday lives of people. But before we get into your breakdown of this 150% overvalued, I want to talk about some of the data that we do get and the kind of picture that it is painting, as murky as it may be. And we just got our last major inflation report before Election Day on November 5th, the Consumer Price Index rising 2.4% from a year earlier after rising 2.5% in August, according to the Labor Department. And that was above the 2.3% year-over-year rise that was expected, so hotter than expected. Core prices, which exclude food and energy prices, up 3.3% year-over-year, and more than the 3.2% rise seen in August, also above expectations. Now, of course, Dave, many are questioning the metrics used to measure inflation in the first place and how accurate it is. But big picture, what is your read on this?
Well, I think the numbers are dishonest. They're not just inaccurate. I don't think they're. I think we've long since passed the point where they're trying to get it right. And so let's look at how they calculate inflation. Let's start with that. So the first thing they do is they calculate the rising costs of housing through OER, which is basically owner's equivalent rent, and the way that's 27% of the CPI. And it is determined by surveying homeowners and saying, how much could you rent your house for? And the answer to that question is, who could possibly answer that question? Who could possibly know what their house could be rented for? And so 27% of CPI looks like it was invented by an insane economist to me. Now, there's other things they do. They do hedonic adjustments where they say, look, you've now got intermittent windshield wipers, and therefore your car is better than it used to be, and therefore we have to correct for that, and then they overcorrect for it. So they say that basically the price of cars haven't gone up. There's so much. As soon as you start putting in these fudge factors, the nefarious behavior kicks in. The one I like the best actually is called substitution. So substitution, they say if you go to the store, and let's say you went there to buy sirloin, and it's twice as much as the price of chicken, and now it's just gotten too high. So what you do is you say, well, I'm gonna buy chicken instead of sirloin, and they say, therefore, your cost of living is actually not as high as it appears to be. Now, let's think about that. If the price of beef is twice that of chicken, the free market is saying beef is twice as valuable as chicken. If you substitutionally correct for that by saying now you're going to eat chicken, don't you have to hedonically adjust for precisely that same amount because you're buying a product that is 1/2 the quality precisely? So substitution shouldn't exist at all. If you look at shadowstats.com, which I think has been demonized enough that people probably ignore John Williams, but if you look at the Chapwood Index by a guy named Bukowski, they both, over the last 30 years, have shown that a more traditional metric for measuring inflation, let's go to Chapwood. They take something like the 50 largest cities. They look at 500 prices in those 50 largest cities. They don't correct for anything. There's no seasonal adjustment, which I still haven't figured out what it is. And they just say, what's happened to the prices? And the Chapwood Index and the shadow stats have been running, I would say, over the last 30 years, on average, maybe 5% higher than the regular inflation, the CPI measured inflation. What does that mean? There's a profound conclusion here. According to a number of smart people, over the 20th century, GDP grew 2.2%. It's not as big as people think. Now, that seems like a low number. I'll give it 3 if you want. If they say inflation's running at 3, but instead it's running at 8, if the GDP is corrected for inflation, that means instead of being positive 3, it's negative 2 because it's being underestimated by 5%. The conclusion could be that for the last 30 years, our economy has been shrinking.
When adjusted for real
inflation. Yeah. And then you look at this growth in the economy, you go, well, where is this growth? You go, well, it's in Facebook. Now, if Facebook went away today, would anyone lose anything? The answer is no, not a chance, right? Facebook is a waste of our time.
Maybe some Facebook friends, maybe some social media influencers would lose their Instagram money.
But the point is that the companies today are not the companies of yore. They're not U.S. Steel. They're not Ford Motor. They're not railroad companies. They're not wealth creating companies. They're financialized companies.
Right.
I'll give Google some credit. Apple makes phones. They sell phones, so they're basically an industrial company. But if you let's look at Microsoft. They make software, right? Has your Word software improved in the last 20 years? No, it's actually gotten worse in my opinion. But here's the important point. Microsoft has gone up, I don't know, about tenfold in the last dozen years. Now, it turns out that fourfold of that is increasing valuation. It's just a higher price for the same revenue stream. Which means, therefore, that if Microsoft were simply to return to 2013 valuations, it would be a 75% correction. And then take a company like NVIDIA, which is somewhere between profoundly overvalued because their customers are buying their chips and they haven't yet figured out how to make a single penny out of the product. To the fact that they appear to be vendor financing through shell companies and therefore could do a 95% swan dive for a whole host of reasons. And so there's a $3 trillion market cap that could go down within an error bar of 0. It did it in 2000. It could do it again. And that's $3 trillion out of people's pockets. So there's just a lot of problems here. I don't think they say, the economists, I'm going to pick on them. Some of you guys I really like, so don't take offense. But they say that their economy is 70% consumption. That's not an economy. You get to consume after you produce wealth. So if I'm on a desert island and I don't catch fish, I don't get to eat. If I don't build a house, I don't have a dwelling to live in. And so you produce wealth and then you consume because you produce wealth. You can't say that 70% of what we do is consumption. 100% of the economy is production of some kind. And the consumption is what we get to do with that wealth that we created. And so it's a silly idea. Well, then you say, well, then why would you say that? Well, because the federal government's growing their debt at 7% a year, which means that we're basically pulling consumption from the future forward. And people say, well, why can't they keep doing it? Because the dollar at some point is going to collapse, and then we're going to give it all back. We are going to give it all back in a catastrophic correction. So
I mean, you're taking issue, you sound very bearish, and we'll get to that longer term outlook of yours, but you're taking issue with not only how inflation is measured, but how GDP is measured. As you said, if you say, we always say 70% of the US GDP is consumer spending. So you're saying that the metrics or the lens through which we look at our economy is completely wrong, completely murky, completely skewed.
So here's another great example. One of the things we don't correct for is the cost per use. So I just put a 70-year-old refrigerator out to pasture. It still worked. The compressor was fine, but we got a new fridge. I'm not quite sure why, actually, in a cabin up in the Adirondacks. 70 years from now, there will be zero 70-year-old refrigerators that still run. Probably 10 years from now, there'll be 10-year-old refrigerators that run because the average refrigerator has a life expectancy of a fruit fly. Now, where in the inflation numbers do they correct for the fact that I just bought a reclining bed in June and the motor broke yesterday from June. Right. So where in the inflation numbers does it correct for the unbelievably high depreciation rates of the goods that we're buying now? Because when you go to the store and you buy something, it's crap.
They just don't make them like they used to.
That's right. I broke a blender from the 40s, the kind that would break your foot if it landed on your foot. A big one of these big heavy ones, right? And then I bought a new blender, which they said, well, it's cheaper, it's got more buttons, so let's hedonically adjust it some more. I guaranteed myself that blender wouldn't last 1/10 the time, which means there's a tenfold inflation correction there. Mm-hmm. Because the per use cost is huge for the new blender. It didn't last 7 years. It lasted like 3 years. And so again, where is that corrected? Where is it corrected for the fact that when something on your car breaks, they have to replace the entire unit, not just some little piece of plastic? And so I think we're living in a really fictionalized economy, which explains why if you go to street level, people feel like they're suffering. Right. And you can tell them there's no inflation and talk to someone just start a conversation with someone at the checkout and say, they say inflation is 3%. What do you think? They projectile vomit.
Yeah, as you say, we've got replacement costs and just basically the metrics through everything that we look at are distorted. But, even this data, even the government data as it stands, inflation is up, over 20% since February of 2020. I mean, sure, it's up 3.4%, but collectively, it's up over 21% since February of 2020. And that's by the government data. That's if you add
That's up. Right, which means it's at least a factor of 2 off. In the book, I was thinking about this as you were starting the show. In the book, this time it's different. Reinhardt and Rogoff talk about how inflating away debt, which it's actually hard to make the case you can inflate away debt. It's actually a very difficult case to make. But they said you only have a prayer of inflating away debt if people don't know there's inflation. So hidden inflation, you can inflate away debt. Once the system catches on to the inflation, then it outruns it and you can't inflate away the debt. And you'd have a hard time convincing anyone we're inflating away debt if our national debt is growing at 7%, if our credit card debt is growing at monstrous rates. All forms of debt are growing spectacularly. What part of this inflation is inflating away debt? We're just getting worse and worse off. And that's what happens. Inflation gets in the DNA, and you cease to be able to lie to the person, say, over the last 4 years, things are up 20%. Yeah, excuse me, they're not up 20%. Someone like Jimmy Iorio happens to not only trade and go on CNBC a lot, but he owns a restaurant. He says he'll give you numbers like 40 or 50% minimum for his restaurant for the inputs.
Yeah, and as you say, this perception management is starting to have cracks in it, right? People aren't buying it anymore. Perception management of government data, it's losing its efficacy there.
This is my shock face you're seeing here. This is my shock face that the government would lie to us.
Well, we know that they're lying, but they're apparently the success of how their lies are being accepted is starting, to change and to wane. I want to bring it very quickly to the near term in terms of, before we get again into your bigger picture outlook, what are we expecting from the Fed by the next meeting, end of the year? I mean, where we learned we had the meetings come out and we learned that there was some pushback for Jerome Powell when it came to that half-point interest rate cut, some officials wanting 25 basis points during that September meeting. What do you expect next from the Fed?
Well, what I would be happy from the Fed is if they parked rates at 5% and never touched them again. The free market can work around Fed funds rates, but if they keep changing, the entire purpose of changing the rate is to throw the free market onto its heels. The entire purpose is to say, now we're going to change the rate. So, you are now officially wrong. You have to correct for that error, right? So I think it was Hayek said, look, we can handle all sorts of bizarre rules as long as they're consistent. But the Fed, their entire purpose for being is to throw us out of equilibrium, right? If we knew the rates were going to be Fed funds rate was going to be 5% till the end of time, the free market would say, okay, I know what to do with that. So I think I was shocked by the 50%, 50 basis points. Not shocked, but not surprised. How's that? I like those two different words. To the extent that you'd have a tough time making the case for it, unless they can see something we can't see. And that is, it's conceivable that they can see now that the regional banks are all collapsing and we just can't see it yet. I would think that I'd be able to see that. I remember when the banking system was collapsing in 2007, and I said to my class in March of 2007, I think the banking system's about to collapse. It took another year and a half, but I was correct. And so it's conceivable Powell sees something that's so ominous that he had to go 50 basis points. I'm not convinced it's actually going to do any good. I'm not convinced that game still works. But as it stands, based on what was headline data, we've got inflation that, in my opinion, is still too high, even using the official numbers. We've got all-time highs in the risk asset markets, which should scare the crap out of Powell. Powell should be so troubled by the fact that NVIDIA is just nuts. That famous quote from Graham, I think it was Graham back in 1949 or 1959 or something, where he said at some point, he was referring to the 20s, the whole idea of buying a revenue stream just completely got thrown out, and it just became nothing but price. And then that's where the markets are. It's nothing but price. So it's like gold. Gold is nothing but price, but we know that. But equities are not supposed to be nothing but. Here, there's your sirens for you, by the way. Equities.
I warned you we'd get those.
Equities are you're supposed to be buying a revenue stream. And you're not.
So then let's take it to that point that you made earlier of markets currently, as they are, being overvalued by 150%. Mm-hmm. Break that down for us. What metrics are you using to get to that number?
Well, I use about 25, but let me give you just one. And I actually posted on Twitter yesterday after you and I had what we'll call a brief chat. And that is, you take the Case-Shiller index and you go back to 1880 to about 1994 and you plot it. And then I actually just eyeballed it, but I think I know the answer anyway. So I think it usually sits around 12. And during that window, if you eyeball what the Case-Shiller price earnings ratio is, it looks like it's averaging about 12 for that. What's that? 20 plus, so 115 years. Then when you plot the whole thing with that same line on it, you can see that the markets left orbit in 1994. You can see that when I say fair value, that's not really quite right. Historical average value is better. If you want to call that unfair, you're welcome to, but historical average value. The markets left orbit in about 1994, and there's an interesting debate about why that date would be a magical date for the markets to leave orbit. Debt picked up massively from that point. There's all sorts of indicators that followed the markets up. The 2008 correction, for example, got back to fair value, but not cheaper. In some metrics, it went actually slightly below fair value. But I had dinner with Mark Spitznagel one night, and I said they just barely got to fair value, and he concurred. He said, and they only spent about a month at fair value. So what we considered to be a horrific correction went back to historical average value.
How are we defining fair value?
By 1880 to 1994, the average.
Of what? Price to earnings ratios?
Price to earnings, price to revenue, price to book, you name it. I do like 25 of them. They all give you the same answer. Dividends, if you wish. You can actually use dividends. Right? The dividends over that period averaged around 4.5%. They got as high as 6%. They're now 1.5%. So averaging 4.5, 1.5. What's the market overvalued? Factor of 3 by that model. So there's everything points to the markets being absolutely out of the Earth's orbit. Now, here's what I'll also tell you. There's never been an overvalued market in history that didn't become undervalued. There's not a single example of one that left orbit and just stayed out there. It just will not happen. I don't know when, but that's why I say, look, if they're 150% over fair value, and if you do the experiment I just said, you'll see it, because the PE is now 36 instead of 12. So that's 200% above fair value. Okay, so you can either correct it back down. Now, what's a correction? I have a definition of a correction most people don't agree with. Some people say 20%. I go, no. Correction does two things. It corrects the price back to a rational level. I would argue a 60% correction would be needed. The other thing is it corrects investor attitudes. For the last 4 decades, investor attitudes, they've developed a sense of invincibility. So every time the markets drop, they say, now is the time to buy. V bounce after V bounce after V bounce. And the markets never, ever really drop the price to cheap. And they never rip the will out of the markets to make them really suffer, where they say, never again. I'm not touching that crap.
And to that point, Dave, to what degree does it matter if you've got this overvaluation if markets are driven by sentiment and so divorced from fundamentals? You own the stock, the markets think it'll go higher, so it goes higher. You know,
short term, that's fine.
You can sell it higher regardless of how that company is actually performing, because so much is just driven by sentiment. And as you just said, there's a dip, great opportunity to buy the dip. So, you know, what forces this correction?
Well, if you're a trader, that makes total sense. But if I were to tell you there's a train coming and I can't tell you when, would you camp out on the tracks? And the answer is a prudent person would not. And so the point is, if you accept my premise that at some point the markets will get cheap, and if you accept my argument that the markets are at least 150% over fair value, you also have to accept my premise that at some point you will be so angry with yourself for not getting out of the way of that disaster. Now, that disaster can take several forms. One, it can take a 29 to 33 form where it dropped 90%, and that formed a bottom. You can correct it like 1967 to 81, where the markets treaded water without inflation correction, but with inflation corrected, dropped 70%. Worse than dropping 70%, it took 14 years. Now, show me a boomer who could withstand 14 years of a 70% drop, and I will show you a very rare boomer. Now, show me anyone who can tolerate that. So at some point, it has regression to the mean is a force of nature. At some point, it has to regress to the mean, and it will.
What is your current exposure to the equity markets?
Well, there's things I'd like to buy, but I'm holding back because I think when the whoosh comes, it'll all go. I have pots of money. I have one pot that comes from my dad that I don't have control over. There is like a 40% exposure there, and that'll get beat up. I have, as you know, a lot of gold. My equity exposure to the market's probably 10%.
Okay. We're going to get into your gold. How much of that is your portfolio percentage-wise is in gold?
All the different forms of gold commitment, including equities, which I don't trust. So what I do is I take cues from guys like Fred Hickey and Bill Fleckenstein, and they say these are the 3 gold miners who actually are run by people who are not idiots or liars. And I own some of those. If they went to zero, my exposure is small enough that besides being being mad at gold equity CEOs, it wouldn't cause a lot of damage to me. I have probably to physical gold, I have probably exposure to the extent of maybe 20% of my total net worth, which my total net worth includes my house and stuff like that. So that's a lot of physical gold. And then probably another 10% in things like Central Fund of Canada, which I'm pretty comfortable owning. Little tiny smattering of silly things like a little, Pan American silver and things like that. And it's almost hobby. It's almost a hobby. It's enough where I go, okay, if that went to zero, I'd feel it, but it would not be life changing in any way, shape, or form.
We're going to get more on your thoughts on gold a little bit later. I want to now get to this 40-year timeline view that you have. Because you've said that the markets, once adjusted for inflation in 40 years' time, are effectively at zero.
Zero. Yeah, it's fourth grade math.
But break that down for us. Give me that thesis.
Well, so what do you accept as so there's so many paths. There's an infinite number of paths to get to 40 years regress to the mean. So 40 years from now, regress to the mean, inflation corrected, right? So it means you got to burn off 150%. You got to account for inflation. If you accept that the GDP grows at be generous, 2.5% on average during the 20th century, will the 21st century be as good? It might be okay. I'd be surprised if it was as good because that was a pretty good century. But let's accept that it's the same. And so we say 2.5%. So if you were to simply grow your way out of a 150% overvaluation, it takes about 40 years. 2.5% compounded, 1.025 to the 40th power. And if you want to drop straight down, you got to correct 60%. Now it's fair value tomorrow. But that won't correct anything because the dip buyers will show up. The way you correct not only price but sentiment is you have to keep knocking investors on their butts over and over and over again. You have to rip the will out of them. How do you do that? You do what the Nikkei did. So the Nikkei, I did a George Noble Twitter Spaces. George was Peter Lynch's right-hand man, so this was a cool Twitter space. And he said you could short it. I said, no, you couldn't, George. You know you couldn't. Trying to short the Nikkei, it took 15 years to find the bottom. Your frictional costs would destroy you trying to short the Nikkei. And so the Nikkei is 35 years later without inflation correction, identical to what it was in 89. It finally made a new high without inflation correction. And it doesn't include dividends. I don't know what their dividends were, but it also doesn't include taxes and fees. And so you could really argue the Nikkei's down 50% for all I know. Still.
I mean, it also doesn't include what's happening with the yen as a currency.
Well, I think the Nikkei that I'm reading is a dollar-denominated Nikkei. I think. Okay. I think.
So let's look at the U.S. scenario. Okay, I get your reference to the lost time in the Nikkei. If you're saying that if I put $100,000 in the S&P 500 now, that $100,000 in 40 years' time is nothing? Adjusted
It'll be
for inflation?
It'll be the same. If it regresses to the mean, and the GDP grows at a reasonable price, because don't forget, you can only earn what you produce. If you don't produce anything, you don't earn anything.
So if I put $100,000 now, you're saying 40 years' time, adjusted for inflation, it'll still just be $100,000. So hence going nowhere.
Inflation adjusted. Here's one for you. A guy named Ron Grice, who runs the chart store, sent me a chart. And he showed the market from 1925 to the present, corrected for inflation using the M2 money supply, which strikes me as a pretty good metric because it's a pretty mathematical thing. I think it's pretty well known. Maybe there's fudge factors in there, but it's pretty clean. And from 1925 to 2025, the markets dropped adjusted for M2 money supply. They dropped. What did you get during that period? You got dividends, which averaged about a little over 4%. Buffett says the most you can hope to get out of an equity exposure is about 4%, which is exactly what you got. And then you say, but those don't include fees, they don't include taxes. So you probably got 2%.
But you're making money along the way, right? I mean, you're saying what are the opportunities that you see along that 40-year timeline, assuming, you come in and out at opportune times?
Well, that's kind of the dividends. The dividends are where you're harvesting the crop as you go. The capital gains is growth of the business. I kind of mentally break it that way. It's not clean, but it's a way of thinking about it. Here's an interesting way. Here's a great case study to see where Pfizer and their vaccine. Pfizer, by the way, has been a lousy investment since 1990s when I think during the Clinton era something caused all the pharmas to take probably nationalized healthcare coming or something, but it's been a lousy investment. If you look at Pfizer before COVID and you look at Pfizer now, it's lower now than it was before COVID. This is how you track profits. And so you go, did that big, huge vaccine payout provide nothing? And the answer is no. In the middle, they had a couple of one-off dividend payments that were exceptional dividend payments. And I haven't actually done the math, but you can actually see the dividend payment spike, hold there for maybe 2 years, and then drop right back down. You can take those percentages for those 2 years, calculate it as a percentage of the market cap. I can tell you exactly how much money they made because that's what they paid out that was in excess of a normal working business. So I think the dividends in some ways reflect what the company earns. Like if you owned a gas station, it's not growing. It's a cash cow. And if you're paying a 4% dividend to yourself owning that gas station, essentially you're getting a 4% return. And so a friend of mine, David Einhorn, talks about companies that are priced at a PE of 5. And the way he presents it, he talks about how no one's interested in these companies. But he also knows full well that if you own a company that's kicking out 20% cash, you don't need capital gains. That company will put out 20% cash and somehow it will find its way into your pocket. Right? Now, here's the problem. If you look at the Mag 7, which I can't remember what the PE ratio is, but it's a monstrous number. According to their PE ratio, they're kicking out 1% a year. You say, well, what if they grow? Okay, let's say their earnings double. They can now kick out 2% a year. Let's say they quadruple, 4% a year. You see the problem? It's mathematically very hard to get out of a 1% cash flow.
So if you're positioning a portfolio for 40 years' time, and granted, that's a very long time horizon, what are you doing then?
Well, I don't think you can position a portfolio for 40 years. I think it's turned us all into traders. So for me, I have a very large cash position, which I call cash. I have a lot of 2-year treasuries, for example. I won't go out long duration. There's no chance I'm lending the U.S. government money at 4% for 10 years. Because if you said over the next 10 years, what's inflation going to do to me? Boy, it could be a disaster. So I'll only go out 2 years. And again, according to my math, I'm probably losing money, but I'm losing money to maintain what a lot of people call optionality. I do believe we are going to have a serious correction. I see opportunities that I think are good, but they'd only be good if I didn't see a serious correction. So when the selling starts, everything's going to sell. People are going to start selling the shirts off their backs at some point, probably. And so you don't really want to own anything when the selling starts. You don't want to own gold even when the selling starts because people will sell whatever they can. But there are things that you say, look, if I have to own something, I'd rather own a 2-year treasury. I'd rather own gold. I'm comfortable with gold. But I'm pretty cashed up. I made a mistake in 0809. I was very cashed up in 0809. But because we only hit fair value and we had done what I thought was a huge amount of damage, I was convinced there was another factor of two. So for me, greed kept me from buying. I bought some tobacco stocks and stuff like that, but not that much. Greed kept me from buying because I said, well, again, back Einhorn, I think gets credit for this. He says, you know what a 90% correction is? He says a 90% correction is an 80% correction and then cuts in half. So you buy a dip, an 80% dip, and then you lose half your money. You feel pretty stupid. So calling the bottom's hard. The mistake that I made in 0809, I won't make again, and that is when it reached fair value, historical fair value, I should have said, how much do I want to own at fair value? And then say 40 years from now, I'll be okay.
So, David, let's take that. Well, we'll see you around in 40 years' time. But let's take that 40-year time horizon, right? Let's take that. Mm-hmm. Maybe a version of you will be uploaded into the cloud, your consciousness. Yeah. Who knows? You're short on NVIDIA, but who knows? Maybe they'll use those chips for some AI application where your consciousness is uploaded by 40 years' time. But let's bring it back to the macroeconomic conversation and using that 40-year time horizon. Where do you see the state of the global monetary system by then, particularly with the view of the US dollar as a reserve currency? Because de-dollarization is one of the topics that we've discussed quite a bit on this show, and potentially how the dollar is losing its status as the king of global reserve currencies. I mean, we've already seen that trend happen with countries opting to trade in their own currencies. New report from JP Morgan showing that the share of US dollar in global currency reserves continuing to drop. Now it accounts for just 57% of reserves are dollar-based as of the third quarter, citing the IMF. That's compared to 73% in 2001. So we're seeing this trend. So let's use that 40-year time horizon of yours. Where do you see the dollar? Where do you see the global monetary system?
I think the problems will be way back in the rearview mirror. I think that's going to happen faster. So when I say regression of the mean over the next 40 years, the path to get there is absolutely unknowable. If I had to guess, I would say that the de-dollarization story will happen much, much sooner. To date, inflation has been well hedged by equities. And I'm willing to accept the idea that an equity is an inflation hedge when the inflation is tame. So, for example, the metaphor I like is shovels are used to move dirt and bulldozers are used to move dirt, but don't confuse the two. So I think when you have relatively tame inflation, equities are the place to be. I think when inflation runs a little wild on you, which I believe it is, and I believe at some point we'll start to pay for this, like in, say, the 70s, I think equities will fail to be an inflation hedge. And that's when gold becomes the bulldozer relative to equities or the shovel. And so that's why I think you want hard assets. You want stuff that hurts when you drop it on your foot, as they say. So I believe that the de-dollarization story is real. I think our absolutely most fundamental mistake that we made was using the dollar as a military weapon against Russia. To the second that we told Russia, by the way, we're going to use the dollar and we're going to knock you out of the SWIFT system and things like that, every leader of every country in the world said, holy moly, I'm now in a position where if I piss off the United States, they're going to hurt me with the banking system. So I think that began a massive geopolitical movement to shift alliances. Now, a lot of currency guys will say, well, the BRICS currency will suck. I don't think it's about the BRICS currency. I think it's about alliances. I talked to Steve Hanke about this for about 2 hours, and he agreed. He's a currency expert. He says, you're dead right. It's not about a currency. It's not about some BRICS currency. It took the euro 20 years to show up. So BRICS currency is not going to show up. It is, BRICS was 4 countries, and they weren't even allied. It was just some guy at Morgan Stanley or something who named him. I can't remember.
Sachs.
A famous guy. Goldman
O'Neill
Sachs.
at Goldman Sachs.
Yeah. Exactly. And he just grouped them together as like 4 emerging markets. But now it's an alliance. And now it's also an alliance that includes maybe 25 countries. Now, for the first time in my memory, we've got 25 pretty important global countries that are saying, we are going to hang out with Russia, China, India, Brazil, and 20 more. We're not going to hang out with the United States anymore. They are changing teams. And that is because we acted irresponsibly with the dollar. And so China's not buying our debt. Russia's not buying our debt. You and I should not be buying our debt. And so who's going to buy our debt? Well, apparently the Federal Reserve at some point, they say.
And yet you just said that you're in treasuries.
2-year.
2-year treasuries. You're comfortable with that level of debt.
Yeah.
So let's bring it back.
That buys me time.
So the BRICS, they're having a summit later on this month, 22nd to the 24th of October in Russia. What are your expectations there? I mean, we know that it's the BRICS Plus, that they've already expanded at last year's summit to include Iran, Egypt, Ethiopia, the United Arab Emirates. Saudi Arabia still sort of straddling the fence on that one, playing both sides for the most part. We know that Turkey, Thailand, Cuba, lots of other countries are applying to join the BRICS. What do you think is going to come out of this meeting? I mean, there's some conversation about progress being made about this new currency referred to as the unit. There are various reports that this unit, as it's called, could be pegged 40% to the value of gold, 60% to a basket of BRICS national currencies. This is what we're getting mostly from Russian news agencies. So they obviously have an incentive in putting out that kind of information. So we've got to, keep that in mind. But what do you think comes out of this next BRICS meeting?
I think the most important thing has already been done. And that is, I don't know what's going to come out of this meeting. The fact that they are holding the meeting in Russia is the story. We have done everything within our power to demonize Russia. And we've got 25 important countries going to Russia to hold a meeting.
Yeah. And they're heads of state. The leaders are arriving as well. They're not sending prime ministers, the presidents. They're all showing up.
That's right. So the cool kids are not us anymore. That's the problem. Now, as I said, I think I mentioned to you at one point, Putin held a 3-hour press conference with 12 prominent journalists from all over the world about 6 months ago. And I've yet to run into a person who knows about the existence of this press conference. I don't know how I stumbled upon it. I got the transcript. I don't know where. I even asked Jeff Sachs if he knew about it. And he sat there like much the way Trump would do, throw the questions at me, and at one point some guy said, I have another question, but I'll wait. And Putin said to him, he said, you might as well ask it now. I'm not sure you'll get another chance. And what Putin does brilliantly is he never waffles. He might be lying, but he goes right through the front door. And so for 3 hours, he fielded questions from these international journalists who asked these pretty sweeping questions about why are you attacking here? What are you going to do there? And it got no headlines. It got no coverage in the West. Meanwhile, 25 major economic forces are meeting in Russia to talk about the future. They're not meeting in Washington. They're not meeting in The Hague. They're not meeting in Iceland. They're meeting in Russia. No matter what we've said about Russia, which, by the way, I don't blame Russia for the war in Ukraine. Let's go there. They're meeting in Russia. I cannot fathom a more important message.
I know you've discussed how you think, as other guests on the show have as well, that Putin was provoked into the war in Ukraine after NATO's expansion in violation of previous agreements post the dissolution of the Soviet Union. But we won't unpack that in this conversation for
I just like to throw that out there just to piss off half your listeners. Yeah.
I think most of our listeners are potentially on board with that when we've had a few guests that do feel that it was potentially an unnecessary prodding. But let's bring it back to this idea of the BRICS. So you said you're not concerned about the BRICS currency. You said, the euro took a long time to happen, and even then it didn't really challenge the dollar. If you're not concerned about the BRICS currency, what then does happen to challenge the status of the dollar if it's not an alternative in the form of a different currency? How does that then threaten U.S. hegemony and supremacy on the global monetary stage?
So to answer this, I turned to a guy who I think has great data and lousy opinions, a guy named Peter Zeihan. He's been looking at demographics around the world and looking at various things. And one of the things that he emphasized, which I think he's dead right about, is the fact that that the U.S. had the only blue water navy in the world. We could project power anywhere on the world, and what that achieved was that it kept trade open. And so someone who said, "Oh, I think we're going to cause some trouble and stop trade," the U.S. military would be down their throats fast. Now, here's the problem: we've now got 25 countries who previously would not have even thought about pissing off the United States because it's been a fatal thing to do, right? If all of a sudden you say, "Oh, we're going to do some gold dinar or something," next thing you know, your country's bombed into a sheet of glass. So making us mad has never been a very healthy move for a world leader. And now all of a sudden you got 25 world leaders saying, we're not as afraid of the United States. We're going to hang out with these commies over in Russia, which I don't think they're commies. China's kind of commie, but I think Putin is the most based world leader right now. I think Putin has his feet on the ground better than any other world leader.
So again, what does it mean for the dollar? You're saying that
it means we're weakening. We as a country are weakening.
You're saying that it's because the U.S. isn't viewed in the same way as it was on the world stage, and many would argue that it was the Biden administration that projected tremendous weakness on the world stage. A lot of people point to the withdrawal from Afghanistan, the debacle that was as a pivotal moment. Keeping in mind, we do have elections coming up. Would a change of U.S. leadership, say it goes to Trump, and I want to get your thoughts on the elections in greater detail, but sticking with this BRICS conversation, would a change of U.S. leadership potentially change this perception of the U.S. and restore the full faith and credit? Well, maybe not so much credit with $35 trillion in debt, but would it restore faith in the U.S. on the global stage if you had a more assertive leader?
Well, if you were a world leader, would you make any big grand bet based on a 4-year window? No. So let's say Trump gets elected. Let's say for some reason they like that. The best bet would be they'll solve that 4 years from now, right? The U.S. will go back to only offering us people that they like, that our power structure likes, right? Trump broke that mold is the problem, and that's what caused trouble. Again, we're back to the fact, what's it do to the dollar? Well, if Russia's not buying our debt, and if China's not buying our debt, and if Saudi Arabia stops buying our debt, and I don't know what their stats, they might have already stopped buying. There's no one left to buy our debt, which means the Federal Reserve has to buy our debt, which means we're monetizing debt, which means the dollar is going to get smacked.
Even if they don't come up with their own currency, let's bring back.
You can't print money and monetize your own debt without getting crushed.
What do you make of the fact that all of these central banks have been buying gold at record levels?
Because they're not stupid. That's what you have to buy, right? The fact that the central banks are buying gold, my God, does that make me salivate over my gold holding? My cost basis on my gold, by the way, for the record, starts at $270 an ounce. I bought from 270 up to about 457, stopped. And then when it sat at 1200 for what felt like eternity, I bought another wad. And I haven't bought any since. But yeah, central banks are buying gold. Someone's going to make a move and say we're back in something with gold, I think.
And yet you don't think it's this currency that they're talking about.
Well, you don't need a currency. If you say here's a currency that's backed by gold, if they come up with a currency that's backed by gold, it's just a receipt again. We're back to the old idea that a receipt for an ounce of gold is really just gold. So it doesn't require cleverness. Like the euro required cleverness because it was a fiat currency and there were all these connections and all these different, how do you have a currency in how do you have debt in Greece and debt in Germany and how do you juggle those two? But if you have a piece of paper that says this buys you an ounce of gold, that's not a complicated currency at all. That's just gold. That's right. Just you could print those. If they said we're going to back this, we have enough gold now. Let's say China has 87,000 tons of gold, like some people speculate, which I think is a big number. China could all of a sudden say we're going to have gold certificates. We're going back to gold certificates. Here's a certificate that offers you 1/10 of an ounce of gold, and they could do it by Friday.
And what would be the consequences of such a move?
It's quite possible that would destroy the dollar immediately.
Paint that picture for us. How would that play out?
Well, why would you hold dollars which are being inflated away, whether slowly or rapidly, when you can hold a certificate that's not being inflated away? That's why the Bitcoin guys kind of have it right. I mean, the Bitcoin guys don't have it wrong. I don't trust the system to leave them alone.
All right. Well, we'll go down the Bitcoin lane, seeing as you brought that up. But before we do, I want to go back. It's your timeline, your 40-year timeline. So just for the sake of wrapping that idea up, it's 40 years time. Where's the dollar? How do you see the world stage? I know you said U.S. equity markets are basically nowhere, adjusted for inflation. Give me your synopsis in a few sentences of 40 years from now.
Well, by assuming regression to the mean and normal growth in GDP, the math of 40 years from now is easy, in my opinion. There's no analog to that with respect to the dollar, with respect to these other things. So
with respect to gold.
Well, so here's everyone likes to say gold has been able to buy an expensive suit since an ounce of gold could buy an expensive suit since the dawn of time, right? But I don't know what a Roman suit looked like. What I've also read is that an ounce of gold could buy you a month's worth of labor. And a month's worth of labor hasn't changed. Just hard, unskilled labor hasn't changed. And so you say, well, an ounce of gold, $2,500 a month, that's about what you'd pay an unskilled laborer. And I'm told that back in ancient Rome, it bought a month of unskilled labor. So I'm not one of these gold is money guys, because if I have all my assets in gold, I go to the grocery store tomorrow and gold has dropped 5%, my spending power's dropped 5%. So the price in the grocery store is going to be more stable denominated in dollars than gold, short term. And they always say, oh, it's not the price of gold that's going up or down, it's the value of the dollar. No, it moves too erratically for that to be an accurate statement. Long term, yes. Short term, no. So if you're not going to need, if you said, Dave, we're going to put you in suspended animation for 40 years, and we're going to wake you up in 40 years, put your assets somewhere, gold would be a big part of that story. And I wouldn't know what else to get. A friend of mine does multi-generational wealth preservation, and I think he said 25% real estate, 25% fine art, 25% gold, and 25%, bonds or something. And the real estate's an interesting one, where you said, But real estate, you can have takeovers. He says what you do is you hang on to the deed. And then when those evil forces get pushed back, you bring your deed back, you reclaim your land. So I think an example in the future could be displaced Cubans who bring their deed back to Cuba and say, that's my land, give it back to me. And but I wouldn't want the fine art. I wouldn't want I'd have a lot of precious metals if you were going to put me in a coma for 40 years and wake me up. And I would not put it in NVIDIA.
I prefer the idea of uploading your consciousness rather than you being in a coma, Dave, that has a nicer feel to it. You mentioned Bitcoin.
Yeah.
You mentioned Bitcoin. So let's go there. You said that the Bitcoin guys do have it right, but you're not convinced?
They have it right in principle. And the fact that I don't jump all over them like some of my gold bug buddies do, I don't think it's a gold or Bitcoin story. What keeps me out of Bitcoin is a multi-layered onion. I think the idea of the limitation, the blockchain is all logical. What I don't trust Bitcoin, I wouldn't trust myself to wake up 20 years from now and say, how'd my Bitcoin hold its value? What I don't trust is, first and foremost, I don't trust the state to not step on it. And the maximalists will say, oh, the state can't do that. That's the beauty of the blockchain. I go, if the federal government says you will go to prison for 10 years if you use Bitcoin, I can guarantee you Bitcoin's not going to do well. Because authoritarianism can take out anything it wants like that. So there's that. Secondly, Bitcoin, and I love the mobility of Bitcoin. So that part of the story, Lynn Alden tells that story the best. Secondly, Bitcoin has not yet been through a credit crunch. So in 0809, it was a twinkle in Satoshi's eye, basically. In 08, I don't know when it actually formally started. It was somewhere back near there. But it was just it was just an oddity. It was just a quirky thing. And so I will be watching Bitcoin with great enthusiasm, not necessarily to buy, but just out of pure interest. If we have another credit crunch, what happens to the Bitcoin market? It could go into a swan dive. Gold gets hurt, but holds up pretty well. I don't know if you remember 0809, you're probably in junior high, so. But gold held up okay through 0809. It got hurt, but not badly. What happens to Bitcoin? That's a fascinating question to me, but it could do a 95% swan dive. It could do a 20%, correction. And that could get me to ponder buying some, but people say, "Oh, just buy 1%." I go, "What's 1%? That's like a $10,000 life insurance policy. It's not going to make a difference." So if Bitcoin's going to make a difference for me, it's got to be a position. I've got to size it.
Right. That's a fair point. We don't know how Bitcoin performs in that particular scenario. For the record,
could be buying opportunity.
For the record, I wish I was in junior high in 2009. I was actually anchoring for Bloomberg Television here in New York back in 2009. But I'll take the junior high compliment any day of the week.
I know.
But on the Bitcoin idea of regulation, some of the Bitcoin maximalists would say that is somewhat elevated as a risk now, relieved as a risk because you've got these big institutions. You've got the BlackRocks backing Bitcoin. It's become a regulated, legitimized asset. So they're less concerned about it being, regulated out of existence because you've got so many of the traditional financial players in the party now. For me personally, I've actually always argued that is contrary to the ethos of Bitcoin, that it is against the whole idea of moving away from the traditional financial system. But it does, to many, allay the concern of it being regulated out of existence. You still see that as a big existential risk.
It's possible that the entire purpose of Bitcoin is being missed by some, and that is that I'm told, it gets to the question, what is the fact? I'm told that the original paper, the white paper on Bitcoin, was written by 3 guys from the NSA. The first paper that had the word coin, currency in it was written by 3 NSA guys. That would lead you to believe that it's possible that the story about Bitcoin is not quite what we're being told. It's not some grassroots thing. Now, what would it be? Well, one of the possibilities is it could be they're crowdsourcing the technological development required to bring in CBDC. So what does Bitcoin do? First, it gets you used to owning a digital currency. Second, they've debugged the whole blockchain problem and all sorts of details. And they say, okay, now we're going to squash Bitcoin, but here's CBDCs. And that's authoritarianism. That's a serious problem. So there's that potential problem. Second of all, BlackRock is up to its ass in DEI. Watch, they'll run from that so fast. So these big money guys will stay in an asset long enough to make a ton of money, and then they will bury you up to your neck as soon as it suits their purposes.
So that is definitely not any sort of way to alleviate concerns that the regulation crisis. No, I don't necessarily.
But I like your ethos argument too. I mean, the last thing I want to do is own an asset that has become one of these financialized assets.
Well, for me, that's contrary to the whole idea. If you subscribe to the vision of what Satoshi Nakamoto after the 2000
but hat tip to people like Max Kaiser and Stacy Herbert, who got in early and hung in there. Those two have to be worth $1 billion. I mean, they have got to be stinking rich. I did a couple podcasts where I said, I'm guessing you guys don't have trouble paying the heating bills.
Well, they're hanging out in El Salvador, so I don't know that. That's probably the air conditioning bills that they need to worry about most of the time, if anything.
They'll pay it off.
I'm sure they will. But the idea of Bitcoin being a Trojan horse for CBDC.
I worry about it.
It has come up on the show before, and it would be interesting, as I say, to have you on and perhaps have one of our big Bitcoin maxis to debate that conversation with you. But that has come up, and regulate the system, get people used to the idea through, this whole private enterprise and lay the groundwork for then a central bank digital currency. Let's hope that's not the case, if for no other reason than the fact that, as our viewers know, nothing keeps me up at night more than the idea of a central bank digital currency as the ultimate tool of oppression.
Yeah, that's a nightmare. That's a nightmare.
And speaking of oppression and control, I think this is a good time to segue perhaps into the elections, right? Mm-hmm. And what your expectations are there.
Well, I believe if the election was straight, I think Trump would own it with a huge margin. I don't think you can take Kamala, who was the least favorite vice president in history, and all of a sudden turn her into a winner like that. I think that's a media narrative that is just a complete fabrication. There's famous people who've noted that people who lived in authoritarian states, they say, look, we knew that it was propaganda. What they're shocked by is that the Americans don't understand that they're getting propaganda. And so there's nothing about Kamala's campaign that looks like a winner to me. Nothing about it that makes any sense whatsoever. And the Democrats who would vote for her should be so disgusted by what the Democratic Party has done to the party that used to be credible. Now, you can say, well, what about the Republicans and Trump? Well, first, what I'll tell you is it's pretty clear to me the Republicans didn't want Trump. They just couldn't stop him. So they want MAGA out of there. They want Trump out of there. They can't say it because MAGA and Trump are too powerful. But the Republicans want to go back to normal. They want to go back to being a bunch of, sort of authoritarian light leaders and go back to the olden days. And so if it was legit, I think Trump wins big. That doesn't mean I think, in March 2025, Trump will be in the White House. I think that to the extent that Biden has shown that the presidency is a laughably irrelevant office, or can be. So I think when the right person is there, I'm reading Annie Jacobs's book, Nuclear War, and it's terrifying. They describe the sequence of events that happens if there's a nuclear strike heading our way, and how they open up the nuclear football and the various checkpoints and stuff like that. And you go, you don't want Biden or Harris with that, and I'm not sure you want Trump with that. I might feel better with Obama with that. you want a very clear-headed person at the helm. And so I think the Biden presidency showed that you can live without a president, but it didn't in any way dissuade me from believing that it's an extremely risky state of being. So I think it hurts the dollar. Let's go back to that. I think showing the insanity. I think if I were a foreigner looking into the United States, I would be scared. I would be saying, oh boy, the guys who used to be dependable don't look very dependable to me. I think Kamala, I can't figure out if she's stupid or if we're getting some professional wrestling skit going on and that she's just playing that role. But I'll tell you, the other day there was a video of her and her teleprompter broke and she could not handle it. Now I could handle it. You could handle it. Trump could handle it. Biden could handle it. But Kamala was just stuck. And so she just repeated the same sentence over and over and over. So she really does appear to lack any sort of intellectual and moral compass. And that scares me. Now, to the extent that she's probably not going to be calling the shots no matter what, or Biden wasn't calling the shots, maybe nothing will change. But Glenn Greenwald wrote an article about the danger of the country being led by committee rather than having a person at the top. Think of the Cuban Missile Crisis without Kennedy. Imagine you remove JFK from that room. What would have happened? And the outcome, I think, would have been very different. I think it came to the fact that there was one guy there who said, history will show that it was my fault if I blow this. And so he tried to get it right. And I think, by the way, back in defense of Powell, I never quite finished that thought. I think Powell's worried about his legacy. I think the economists and the market makers and stuff are underestimating that Powell might be more worried about whether he's going to be Arthur Burns or Paul Volcker than they're giving him credit. So in the New Orleans meeting for several years in a row, I've said, you guys are underestimating Powell's resolve to be one of the great central bankers, if he can. Now, I don't know if
he's going to hold steady, meaning you don't see more rate cuts.
That's why I was shocked by the 50 basis points. I don't think they were called for, and so he somehow caved on something. But if he goes 50 and then says, okay, now shut up, that's all you're getting, that's fine. That's fine. He threw a bone. But if he keeps plopping it down, he takes it back to zero, then he's blown it, in my opinion. He will go down in history as a weak central banker. Yellen is a post-it note in the history of central banking, and Bernanke was a disaster, in my opinion.
Let's bring it back to the elections then, what the potential outcomes could mean for the markets. So I hear your point. A lot of people sadly have lost faith in the integrity of the system and in the institutions. Mm-hmm. So I hear your point that if the elections are indeed fair, then you think that Trump wins. Look, I mean, we've had guests on the show that say they're not going to let him win, that have called correctly an assassination attempt following the weaponization of the justice system, as many have seen it. But, you know, we still, let's see how that one plays out. What are you doing from a market perspective to prepare for either outcome?
Well, I'm already hunkered down in my bunker of doom, so I've got nothing else to prepare for. So I have been prepared for worst case scenarios for quite some time. So after having, as I said to you before, my greatest decade was the noughts. When everyone else was getting crushed by two bear markets, I compounded 13%. My worst decade, 13% per year. My worst decade were the teens. While everyone was partying like it was a drunken orgy, I was hunkered down still because I didn't think it was over. And I got some like 4% a year out of the teens. And everyone else was getting, 12% or something. So I got crushed that decade. Overall, I've done well, but I'd like to do over on the teens. And I wish I had, but my
rational analysis. How do you see gold responding? How do you see gold responding one way or another?
I think gold could do what the bulls say it's going to do. I think the guys who are euphoric over gold might be closer to right than normally. Euphoric people are not right. They might be right. I'm very comfortable owning gold.
Do you have a price forecast for
early 2025? Early
we'll keep it short
2025?
term.
Oh, I have
We'll
no
keep it
idea.
short term.
Short term, I have no idea. Gold could be anyway. Yeah, long term, could gold get to 5,000 in the next 2 years? Yeah, I think so. But by early 2025, I don't have any idea.
So 5,000 gold in the next 2 years. And again, it's not necessarily
but I'm just guessing. I'm just guessing. I literally, anyone who actually takes what I just said to the bank should get a CAT scan. It's an opinion of an organic chemist.
True. It is an opinion. And I want to now bring it back to the idea of opinion versus fact. But before we do that, you did say your opinion that you think that the age of the American experiment could be over. Expand on that.
Weaponization of the justice system was Biden's legacy. I think it's actually in my opinion, the Democratic Party's legacy. So I see, gender transitions. I see a lot of real rot in the system. But by using the justice system to take out political opponents, we have really, really stepped off the precipice, in my opinion. When Biden bragged about putting J6ers in jail for a sum total of 870 years, that to me, that was Hitlerian. That was just truly awful. So you could argue January 6th was a sad day in U.S. history, but the Saturday was when the president bragged about putting people in jail for 870 years because of it. The fact that they've used the justice system to go after Trump in a horrifically brutal way. That for my brother's an accountant. The accounting convictions that they got out of him, which were corrupted at so many levels, my brother can't even figure out what law he broke. So here are 34 felony charges that seem to be unfounded in the justice system, in my opinion. The fact that the voting interference and all that stuff, the Stormy Daniels crap, the E. Jean Carroll crap, these are all weaponizations of the justice system. I think Merrick Garland is treasonous. Now, I don't know the formal definition of treason, but I'd love to put him in front of a grand jury and let him figure it out. I think Merrick Garland is a horrific human being at this point. And it because he should have not let the justice system gone that far off the deep end. Another example, it's not even politicized. Daniel Penny saves a bunch of people in a subway. Guy's crazy. He walks in the subway, says, I'm going to kill people. I don't care, blah, blah, blah. Daniel Penny puts a choke on him for 90 seconds. It wasn't 50, 90 seconds, and he's up on a homicide charge. Daniel Penny, if he'd pulled out a gun and blown the guy's head off, I would give him a medal for taking control of a bad situation. The guy was threatening to kill people, yet he's on a homicide charge. It's just astonishing to me. And so the justice system has been destroyed by somebody, and I believe that it's been destroyed by somebody who is using a Sun Tzu sort of tactic. I think these are people who wish to destroy the United States. I think this is all part of a plan. You're not going to destroy the United States with battleships and with bombers and things like that. You're going to destroy us by getting us to destroy ourselves. And they are doing a superior job of doing that.
We're running out of time, David, but I think this is a good place to then hear your idea as part of this phenomenon of self-destruction, of how we're in an era where we're questioning what is a fact and how much of that is in fact designed to create a lack of faith in the system. So expand on this idea that you say you want to touch on, the framework of we don't even know what a fact is anymore these days.
Well, CPI, let's start with that. We've already talked about it. One of the mistakes they made, by the way, is they handled COVID wrong. So COVID clearly was a geopolitical event. It was not a health event. If they had played it with a slightly softer touch, they might have gotten away with a lot of stuff, but they overplayed it. And so, if you don't at this point know that the vaccine killed a lot of people, you have not been paying attention, because it did. If you don't know that ivermectin is an unbelievably good drug with no side effects, you have not been paying attention. They overplayed their hand on this. And so you've got a huge percentage of the population going, okay, so the COVID story was a farce. They locked down kids who were not getting sick at all. It was a farce. They destroyed 3 million small businesses. It was a farce. Once you start questioning things like that, you don't stop. You say, what about 9/11? What about Pearl Harbor? What about World War II? And it turns out that you find that they're always lying to us. And that the lies have felt like white lies when in fact they're not really white lies. There's some really egregiously horrific lies. And so now you've got a populace which is, I would say, on a bit of a DEFCON scale emotionally. And here's the problem. We're at a market top. They say the economy's still okay. If 10 years from now you were to look back, I bet you would say that the chance that this represents some sort of top and that we're going to go through a tough period. We have never been at a top with people in such a grumpy mood. Remember 2000? It was euphoria. The world was phenomenal. Everything was great. We were all going to get rich off pets.com. You know, the internet was going to change the world. It felt so good. This top, you got people who are talking about civil war. You got people who are talking about authoritarianism. By the way, people includes me. This emotionally looks like a bottom. And so then the question is, what happens when, let's say I'm right, the boomers lose more than half of their retirement money? What happens when, because of these downturns, you know, Gen X or Gen Z or millennials or whatever still can't buy a house? And society's going to be in a bad mood. So this gets you into fourth turning thinking. It's a little too pre-canned, right? Categorical. But what happens if the next 10 years is the bad 10 years? It could get pretty gruesome, I think. Now, I don't like projecting such things, but I wouldn't be shocked. Springfield, Ohio has 20,000 Haitians in a town of 60,000. I'm doing a second podcast with one of the world's expert on the southern border. He's a border guard who's written the book on it, who's made documentaries on it. And we've let thousands of people into this country who are bad actors. Possibly tens of thousands, possibly hundreds of thousands. And I'm not talking bad actors because they're poor and they're people of color, whatever. I'm talking people who maybe came here to be bad actors. If I were an enemy of the United States, and over the last 4 years, those borders were thrown wide open, I either moved unbelievable numbers of my people across those borders into the United States, unmonitored, or I am not a very scary enemy of the United States. It was an opportunity that our foes, our adversaries, couldn't possibly have overlooked. Once we close those borders, they might say, okay, everyone, we're going to get in, we've gotten in, so now what do we do with that? And all of a sudden, things start blowing up. And all of a sudden, we start getting shootings, and you've got this looting phenomenon. We've got society figured out that 20 kids with their cell phones can organize a loot, and they can go in and destroy a store in 10 minutes.
David, and unfortunately, we're out of time. You're painting a bleak picture. Any quick positive note that you have for us?
Well, Jonathan Turley's book is a must-read. The Indispensable Right. It's about the right to free speech. And that's what COVID taught us we didn't have. You could not speak up against it. You now could not speak up against Ukraine. You could not speak up against, heaven forbid, someone touch Israel, Gaza. Oh my God. Turley tells a history of the battle for free speech. And the good news is it cycles. And say, okay, when times get tough, free speech gets stepped on. And it's been going on for 250 years, this cycling. It's a very scholarly and riveting book. Those two don't go together well. I urge everyone to read it. Here's the problem. The good news is it cycles and therefore will cycle out, presumably. The bad news is Turley, when he does interviews, says, and he's a brilliant legal scholar, he says, I am not sure we're going to get out of this one. So I'm back to doom. But read Turley's book. That's my good news.
You're back to doom, but you've got some good reading for us in the bunker, at least. Keep Gold and a few good books in the bunker. We don't know what a fact is, but I'll tell you what is a fact, and that is that I've enjoyed speaking with you and appreciate your very candid insights and information. So thank you very much, Dave Collum. Really appreciate it.
My pleasure.
And thanks as always to our viewers for watching. A big thanks to our sponsor, Goldback. For our viewers not yet familiar with Goldbacks, it's an easily portable form of a physical, interchangeable gold currency made of real 24-karat gold. Now, these are gold notes with real gold woven inside. The gold is vacuum deposited using state-of-the-art proprietary technology. And with Goldbacks, you can help protect your wealth against fiat currency debasement and devaluation through the stability of gold, because they are in fact made with real 24-karat gold and they appreciate with the price of gold. And Goldbacks allow you to own and spend gold in small interchangeable increments. You can buy Goldbacks starting at just about $5. Goldbacks can be used as real money from small to large transactions. There are over 5 states where Goldbacks can be used to pay for goods and services, from a growing list of over 2,000 businesses where Goldbacks are accepted as payment for goods from coffee to sneakers to RVs to services like chartering flights, getting your car repaired, or even your accounting services. And there's also a way to earn interest on Goldbacks that you get paid back in Goldbacks that you own. So get all of those details on goldback.com. If you want to diversify the way you hold your gold and get some Goldbacks, there is a link in the description of this video with where and how you can buy your Goldbacks. So make sure to check that out. As usual, thank you so much for checking us out. Please feel free to leave us your comments, praise, whine, or just opine. From me, Michelle Makori, and the rest of the team, we'll see you soon.
On the Spot with Michelle Makori is brought to you by Goldback, inflation-resistant 24-karat gold currency. Protect your purchasing power, grow your wealth annually, and spend at over 2,000 businesses. Learn where to get Goldbacks at goldback.com.